All right, we'll get started with the news. And it looks like a little bit of news was going on overnight in the European session, in the London session. 3 a.m. the Spanish flash CPI from year to year happened. It looks like it was exactly what they forecast. So it may have been some consolidation going on in the European markets for the European dollar. Also, the 10-year Italian 10-year bond auction happened. And it says no consistent effect. There are both risk and growth implications. Okay. For the European dollar. Gotcha. All right. And then at 8:30 a.m. we'll have our Thursday news happenings. So it says final GDP quarter to quarter. It's the annualized change in the inflation adjusted value of all goods and services produced by the economy. If the actual is greater than forecast, it'll be good for the currency. We'll definitely see what happens with that at 8:30 a.m. We'll also have our unemployment claims. If the actual is less than forecast, it's good for currency. And it's the number of individuals who filed for unemployment insurance for the first time during the past week. So not the people who are already on unemployment, just the people who filed for the first time. If that amount is less than what they're forecasting, then it'll be good for the US dollar. Final GDP price index quarter to quarter. It's the annualized change in the price of all goods and services included in GDP. If the actual is greater than forecast, it'll be good for the currency. So, and then we'll have pending home sales at 10 a.m., natural gas storage at 10:30. So pending home sales would be the change in the number of homes under contract to be sold, but are still waiting the closing transaction, and it's excluding the new construction. So if the actual is greater than forecast, that'll be good for currency. Natural gas storage, I don't care what color this folder is. If you trade oil, then at 10:30, the oil market is going to move. FOMC at 1 p.m. FOMC member Cook will be speaking. If what he's talking about is more hawkish than expected, it's good for currency. He's due to deliver pre-recorded closing remarks at the Minorities in Banking Forum in Dallas. Federal Chairman Powell speaks. When he speaks, the market moves. When I say when he speaks, the market moves. The market really moves. If you're not even in the trade, just check out what happens with anything related to the US dollar at 4 p.m. when he's speaking. Watch how the market will get erratic. He's due to speak at a town hall event with educators hosted by the Federal Reserve in Washington, D.C. And it's Federal Reserve Chairman Jerome Powell. And if he's speaking more hawkish than expected, it's good for currency. So just watch how the market moves at 4 p.m. Eastern Standard Time when he is talking. I have seen it. It has been crazy. 7:30 p.m. tonight, Japanese yen, the Tokyo core CPI is the change in the price of goods and services purchased by consumers in Tokyo, excluding fresh food. And if the actual is greater than forecast, it's good for currency. And then they have their unemployment rate. If the actual is less than forecast, it'll be good for currency. It's the percentage of the total workforce that is unemployed and actively seeking employment during the previous month. So how many people are unemployed that are seeking employment? And it looks like the rest is yellow folders in it's an all-day holiday in China, and in AUD this the change in the total value of new credit issues to consumers and businesses. So the actual rate and forecast will be good for currency. So let's go. Let's see what our trades did yesterday. Oh, Lord have mercy. All right. So 8 a.m. is here. Perfect, 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 perfect gold trade. I've never seen one like this before. Just perfect. Where it dropped out the bottom and at 8 o'clock and never came back. It literally, if you would have taken the market execution sale, that thing dropped 1,898 pips. 1,898 pips. That is amazing. So gold was a win. GU 8 a.m. All right, 8 a.m. So dropped out the bottom here. Has some little bit of drawback. And then you won 18 pips on the bottom side. Then it peaked out the top for a 45 win on the top side. So a GU was a good win. You won on the bottom and you won at the top. EU, EU dropped out the bottom for a win of 32.9 pips. Right, so looks like UJ went out the top for a win of 33 pips. AUD USD. Now this looked like it could have been a lesson based on if you chose to jump out this or not. So let's see. Now, if you had an alarm set for this point and the top was 0.63786 and it closed at where's my open high low close? So that closed 0.63788. So it closed basically 2 pips above here. All right, so if you took the buy, got 9 pips, then it dropped. If you took so that was not a win. On the top side, this was not a win. The first top side. Then on the bottom side, if you took the sale, you got 23 pips for a win. Then this side looks like it went more than 50% of the zone. So you would, if you took the trade the opposite direction, it would have been 6 pips, and then you would still be in drawback. So this right here, we're going to call it a lesson on AUD/USD because originally this peaked over the line and then dropped. We didn't get enough pips on the top side in order to make it a win. So AUD/USD was a lesson. All right. So in the chat, I see EU. So let's go over this. All right. So above and below is the strategy that we use every morning, 8 a.m., Monday through Thursday, 8 a.m. Eastern Standard Time. And what we do is we make sure our chart is free of lines and indicators and everything. And we have a clear chart. We would take our Fibonacci retracement tool, which is the third one down here, and I go from where the market starts to where the market ends. So because we have relevant data here, the market starts here and the low is down here. All right, so we have trapped the market in between the highs and the lows. So now what we do is focus on where the market is. Where did the market last close? Where did the last candle close? The current candle moves so much that we don't know where it's going to end up, but we definitely know that the candle before it is not going anywhere else. So we use that to determine which fib lines that we're going to use for determining when we're going to get into a buy or sell. So for this particular pair, we also have to make sure all the time you're on the right pair in the right time frame. We use the hour time frame for most of our strategies. So right pair, right time frame. So this is trapped. This market closed last hour between the 23.6 and the 111.4 or the 114. So what we're going to do is we're going to just section off so we can know the 114 and the 23.6. All right. Now, when we use our default fibs for this, so these are the default fibs, but we add the 88.6 and the 114. Now, the reason why we add the 88.6 and the 114 is to even out this fib, because there's so much money in between here and here that we don't want to wait until the market gets all the way down here before we enter into a trade. If it's down here, we don't want to wait till the market comes all the way up here. And so we just we split it in half and added the 114, and on the top side, it would be the 886. because on the top side, there's a long way to go between the 786 and the 100%. So when we add the 886, it just evens the fib out. All right, so all right, so if the market closes, we do this on the hour chart. So if the market closes above this line, we will market execute buy. Below this line, we will market execute sell. If the market goes more than 50% of a line, we would take the trade in the opposite direction because usually impulsive candles correct themselves. Now, impulsive candles always correct themselves, but they don't always correct themselves on the next hour. So that means that's why it is so risky for you to take the trade in the opposite direction. We'll see where this happened. This impulsive candle right here happened. The move to correct it didn't happen for 1, 2, 3, 4, a bunch of hours later. So then it started correcting itself here and went into the opposite direction. So you definitely want to be careful when you are looking at the impulsive candle if you're going to try to take the market in another direction. Now, on this impulsive candle, what happened the very next hour, it started going in the other direction and actually took, you were able to get 24 pips off of the opposite direction trading. So therefore, it's, very good sometimes to be able to just go ahead and get it out the way because it eventually corrected. Because when you see this candle, you look at, when I say correction, I'm looking at from the top of this candle to the bottom of this candle. And all it took to correct it is everything is covered now. So that's a correction of an impulsive candle. And it happens all the time. Big candle, and then the market just takes its time and comes back up to correct all of that. All right. So for EU, our above is 1.05471, and our below is 1.05167. EUR USD above 1.05834, and below is 1.05167. All right, the next one I see is GU. So we'll clear our chart, reset the view, take our fib from the highest point to the lowest point. The market is trapped between the 23.6 and the 38.2. All right, so for GU, above is 1.22285 and below is 1.21826. We have AU. AU's trapped in the same spot between the 38.2 and the 23.6. Yes, I have a question in the chat.
Morning.
Good morning.
All right. So basically, when you're saying that once the candle closes above the fib line, upon the next opening candle, that's when we market execute.
Yes, so this is a market execution strategy. So we would not go into any of these trades until after the hour closes, which is at 9 a.m. So if the market closes above this line here and it closes anywhere between 0 and 50% of this line, we will market execute buy and take the trade up. If it closes below on the hour and goes anywhere between here and here, then we will market execute sell. All right, for AU, our above is 0.64008, and our below is 0.63740. US oil. All right, US oil looks like it's trapped between the 23.6 and the 38.2. All right, so above for oil is 92.517 and below is 91.599. All right, so I have EU, GU, AU, and US oil. Do we have any other pair we want to look at? UJ? UJ is trapped between the 114 and 23.6. So for UJ, above is 149.448 and below is 149.156. Gold. Great question, Oral. This strategy can be used 24 hours a day during the market time. So you can mark up the chart above and below at any time, but you just wouldn't enter the trade until after the hour closed. After the hour closed. So now, if you marked it up at 8 o'clock in the morning, and you can look at it all day because the structure isn't going to change. So you can just like this. It was between these two zones for so many hours, and then it broke out. So you wouldn't even get into the trade as long as it was in this zone right here. But as soon as it broke out, it gave you all the money. And then if you would have started here, it was in this zone, but then once it broke out, it was money, 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 money. Could have stayed in it forever. Once again, it stayed in the zone between those two zones, and then it broke out a little bit at the top and gave you some pips, and then it dropped. So don't be greedy. Just make sure you get your pips and go, because it's on gold pairs. The points that the points that you get, the money that you get off of indices and energies and stuff is greater than what you would get off of a regular pair. So, and then when it dropped out the bottom, it just fell out the sky. So you can definitely keep the same above and below patterns until it completely breaks out of your framework, and then you would get a definite. Then you would mark up another chart. So as long as the gold is sitting into this zone, you wouldn't make a move. But then that USD news is going to hit, and more than likely that it's going to go down to this line and then go all the way up. And we'll see in 2 minutes. So for gold, above is 1881.20, and below is 1872.66. There's trap between the 114 and 0. Great question. Great question. So news is going to happen in about 1 minute, about 50 seconds. Did we have any other pair we want to look at? Any questions or concerns that we have? GN, GBP, NZD.
All right. For better understanding, right? Once we get to the chart, we're on the correct pair, correct time frame, which is our chart. Now we're going to find the highest point in the market, and we draw our fib from that point to the current market, right?
From the highest point to the lowest point, because the lowest point may not be the current market. So like from here, based on what's on my screen, my highest point is all the way over here, and my lowest point is right here. So that's where we get our highs and our lows from what's on your screen.
And whatever point the current market is between that fib level, that's where we use our above and below.
The current market we will make sure that we trap the market where that the closed candle before the current market. The current market is moving, so we cannot determine where the market is until after the candle closes. We don't make a move until after that current candle closes. But the candle before it will determine which fib levels we're going to use. So because this blue candle closes at the top and red candles closes at the bottom, because this candle closed here, we're going to use this fib level right here. And because this is the fib level below it, we're going to use this fib level below it. So for GBP NZD, our market is the above is the 23.6 and our below is the 114. So then I just mark those off so I can know. My above is 23.6, my below is 114. And so therefore I'm only looking at anything between this red and blue, this blue and red, these blue and red lines. I'm not looking at anything else on the screen, just these blue and red lines. So once it makes its move, it makes the closed candle. Once the closed candle pops out of here or down here, you see this candle, this was blue, then it's red. So it's moving so much. That's why we cannot make a determination where it's going. But we already know that this blue candle here is not going anywhere else. There's nothing else left in that candle. So
Okay.
So our above point is here and our below point is here. So for GBP NZD, our above is 2.05199 and our below is 2.04592.
Thank you.
No problem.
One more question. Where can I find the fib levels?
All right, so on your trading view, you go to the third.
No, I mean the coordinates for the levels for the fibs.
The coordinates for the fibs on this left-hand side over here, you
Yeah.
see those?
Yes.
You're
Is
talking
that
about,
default? Is that the default fibs?
yes, these are default fibs added with the 114 and the default fibs adding the 114 and the 886. So we took the default fibs, and these are the default fibs. But the default fibs do not have the 886 and the 114. But because of that, it takes so long to get between here and here, and
Oh, so
here
I
and here.
basically just turn it on.
Yes. So I just added the 114 and the 886 so we can even out this fib. And you
Oh,
see how
okay, okay, thank you.
more uniform this is. So yeah, this is the default fibs, and you add the 114 and the 88.886.
Thank you. I thought it was like specific coordinates.
Well, it's the default fibs, and then we add those. And so in order to, and then your default fibs will tell you exactly what price point is listed at that particular fib level. All right, so let's check out the news. It looks like it may have been negative, in my opinion. So let's see. All right. So we have the final GDP was negative, and we had the unemployment claims that was positive, and then the final GDP was negative. So the USD market is probably on its way up. I'm sorry, USD market is probably on its way down, and then the everything else going against the USD should be going up, just like gold, GU, EU, and USD JPY should be going down. All right. All right. Now, do we have any other questions or concerns?
Yeah, you said that so I make sure I understand you correctly. The dollar is going down. Everything with the dollar in front is going down, and everything with the dollar in back is going up.
Yes, sir.
All right. I just want to make sure I got clarity on that. Thank you.
No problem. Thank you. All right. Do we have any other questions or concerns? Our next class is our New York session. It is at 9 a.m. Eastern Standard Time with me and Mr. Kilbay. If I don't see you on that, today's Thursday, we'll have our trauma healing class at 8 p.m. Eastern Standard Time with Mr. Brita Shelton. And let's see here. Make sure you get your trading journals. Journaling is vital to your trading journey. Make sure you get your trading journals. And if I don't see you this in the next, yes, I have another question.
My apology. The trading journal link is in the back office.
It is.
All right. Thank you again. My apology.
No problem. No problem. All right. They're $14.95, and that includes your shipping. All right. Does anyone have any other questions, concerns, comments, queries, anything? All right. Well, I do thank you guys for so much for jumping on with me this morning. As always, it's about peace, love, and freedom. And put a smile on someone's face, starting with your own. And I'll see you guys in the next call at 9 a.m. Eastern Standard Time, our New York session.